Right now, the markets are pricing in about an 85% chance of a 25 basis point rate hike. I think that's exactly what they're going to do. I'm going to explain real quickly, give you guys the rundown of why you're likely going to see 25 basis points. Okay, go back, rewind 2 weeks. 2 weeks ago, in fact, 2 weeks ago today, Jerome Powell was in front of Congress. We had just gotten out data that was inflationary, and he basically said to Congress, listen, we may have to go 50 basis points. After that, we saw the banking markets collapse, right? We saw the banks like Credit Suisse, SVB, SBNY, all of these banks collapse. Stock prices of all these banks collapsing as well. I mean, take a look at FRC recently, down huge from the all-time or even 52-week highs. So the bottom line is that the Fed was put in a pickle here. They don't want to go to zero right now because there still is, number one, inflation. Number two, if they go to zero, right? If they go to zero interest rates, the markets are going to cue off of that things are a lot worse in the banking sector, that things are very, very chaotic, that there's a potential catastrophic black swan event coming. And so ultimately, what the Fed will do is probably thread the needle with a 25 basis point. This way, they don't really raise much, but they raise just enough to kind of keep confidence that they're in control and that we're not looking at a major banking collapse that's even greater than what we've done.
Bitcoin continued to hover at around $28,000, up slightly on Wednesday, although some traders see the price going up to $30,000 or falling to $25,000 on positive or negative momentum, depending on what the Federal Reserve announces about interest rates. Analysts expect the Fed to raise rates by a quarter point. Edward Moya, the senior analyst at foreign exchange trading firm Oanda, said momentum flows could support a 5% move in either direction. If the Fed doesn't spark a rally, Bitcoin could settle closer to the $25,000 region. Hello and welcome to Crypto Street. In today's video, founder and chief market strategist at InTheMoneyStocks.com and Verified Crypto Investing, Gareth Soloway updates about Bitcoin's current market standing, the FOMC meeting, and his outlook for Bitcoin in 2023.
Press conference, I expect him to guide in a dovish manner. He has to guide this economy through this banking process, this banking crisis. The markets and the economy, no doubt, slowing down due to this. He has to see that, and he also has to kind of leave the door open for future rate hikes if that does happen. But I'm looking for a 25 basis point hike and then a kind of pause. So we could be looking at not a pivot. A pivot technically would be dropping rates, but I think after the hike today, you're looking at a pause until more data comes out and more stability in the banking market. All right, on this, let's take a look. The S&P futures right now are trading fractionally lower, basically flat on the morning session. The NASDAQ 100's down a little bit. Bitcoin is trading up just a little bit on the day. I'm going to get into some charts we're going to start discussing here very, very quickly. The big one today, and this is going to be interesting, guys, watch the U.S. dollar. I'm going to show my chart now. We're going to start out with the U.S. dollar and take a look at what that shows. So what's interesting to me about the U.S. dollar here is that you're coming into this Fed decision with technical support, right? So again, if we look at the dollar, it had this 3-bar surge, 1, 2, 3. Then bullish consolidation, sideways consolidation after a 3-bar surge is definitely bullish. We then saw upside in the U.S. dollar. Since the highs here and the banking crisis began, we've seen the dollar start to decline. Interestingly enough, look at where we find ourselves back into going into this Fed decision. So interestingly enough, does this announcement, does the Fed calm fears about a banking crisis? If the Fed calms, and think about this, right? If the Fed calms the banking fears down, does the dollar bounce? Does the Fed look like they're in control? Does the Fed say that the bleeding has been stemmed or stopped in the banking sector? Does that yield a bounce in the market? If the dollar bounces, does the banking system bounce? Do the bank stocks bounce? But then does technology sell off? Because usually when the dollar bounces, tech sells off. Now, what's fascinating about the last 2 weeks is that tech stocks have been a beneficiary of money flow that's been going out of the bank stocks, right? We've also seen Bitcoin do well. We've seen gold just ripping higher until yesterday's rally in the banking stocks when it really came back in. So we're really looking at, for me at least, when I look at the dollar chart today, number one, it's at a pivotal level, all right, which means that the decision today is either going to bounce it, which is the more likely scenario. Remember, everything I do is all about probabilities. There's no, I feel, my gut tells me. That's BS. All right. Anyone who's giving you advice based on what their gut tells you, you shouldn't take that advice. Probabilities are the name of the game here. And basically what you're seeing here is the dollar's into technical support. So the probabilities favor a bounce in the dollar. If not, and you break lower, guess where the dollar's going? The dollar's going to head back to the recent lows all the way down here. There's really not a lot of technical support once you break this level. So again, probabilities favor a bounce in the dollar, which tells you the Fed is going to try to reestablish the fact that things are not that bad, even though they're going to take kind of a slight hike and pause mentality. They're going to calm fears, and that should give the dollar a bounce. If that happens, we could see gold selling off a little bit. We'll watch to see what Bitcoin's going to do. Speaking of Bitcoin, we got to go look at this chart, guys, because Bitcoin is also at a major pivotal level. You guys see, and by the way, for those of you that have followed Fed decisions or any big decision, jobs numbers, anything like that, what you'll notice is charts tend to be at major pivotal levels going into these announcements. All right, so when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021. So again, this is the symmetry of the charts. This is the power of the charts. You know, so many people look at this chart, right? I mean, you look at this, what you're seeing on my screen right now, and you say, how do I make sense of this? This looks like a bunch of jumbled ups and downs and whips and lefts and rights. And ultimately, there is sense that can be made out of it. This is why chart reading works. Back to Bitcoin. So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about 1,000,000. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking, when could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right. So 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.